the shares right now are pretty well the same before we started the drilling. So they are actually right now a very, very good bargain because nothing has changed. The 6 wells are still there. The 6 wells still have the reserves. When you talk about a glitch, it's just normal production issues that you have with a field. We're going to be reperforating 3 wells. And what that does is because the gas comes in at 4 to 5 to 6 million cubic feet per day and it blows the water out. So that'll produce like that for, 2, 3, 4 months.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are getting a much requested update from sponsor Trillion Energy. It's been a rough patch in the oil and gas patch recently, but we're here with Trillion Energy CEO Arthur Halleran. Art, we've been talking for years now. I said when I first found this company, it was the most undervalued company I ever found in my 40 plus years of investing. And now with the company trading at close to 1 times earnings, try to find that, I still believe that. Undervalued, underappreciated, problems emerge, but business is all about solving problems. What problems have hit you that you didn't expect, and what have you done about them?
Okay, well, thanks, Kerry, for having me on this talk show here so I can explain some of it. Like you say, the shares right now are pretty well the same before we started the drilling. So they are actually right now a very, very good bargain because nothing has changed. The 6 wells are still there. The 6 wells still have the reserves. When you talk about a glitch, it's just normal production issues that you have with a field. So we have long directionally drilled wells. And when you're producing the gas, you get some water coming in and it causes water loading. It's not the flank migrating up. And then what happens is it's just the weight of the water. Now at the perf zones, we came up with a plan. We've also engaged, and they are engaged. They've already given us the first report, a facility production engineering firm from Calgary. And the short-term fix is perforation, which we are doing and which we put out a news release. We're going to be reperforating 3 wells. And what that does is because the gas comes in at 4 to 5 to 6 million cubic feet per day and it blows the water out. So that'll produce like that for, 2, 3, 4 months. And the long-term solution is to put a pump in the borehole to pump the water so that the weight's not done. We have 3 alternatives. We're just waiting for the arrival of the pumps, and we're going to be doing a test study. That doesn't mean we're not going to turn those 3 new perf wells out. We're going to put the test pump in another well without reperforating it to bring everything back. So there's no reason for the shares to go down the way they did in the last few days. I know why they went down, and so the people should know that I know. And because nothing has changed, the production is still going to be there.
The market price comes and goes. My biggest opportunities, I'm still major position in Trillion, has come from mispricing and misunderstanding by the market. That's normal. Getting back to the consultant you brought in, they looked at, and like you said, long directionally drilled wells prone to water seepage, which makes complete sense. And this company brought in world authority in optimizing gas fields and production. They figured this out almost immediately, didn't they?
Yeah, so what they've done is there's going to be 3 stages. On the first stage, they just told us the issues, which we knew some of the issues, but they pointed them out. The next stage is they're going to show us the alternatives to, fix it. And the third stage is to give us learnings when we drill our new wells, right? So an example would be one of the first things they pointed out, which we mentioned before, but was tubing size. We had 4.5-inch tubing, and that was because we needed that size tubing to run the borehole tractors to bring the perforation string to perf the zones. And then that's too big. They say we should be down to like 2 3/8 inch tubing, and that makes it more production, can lift the water. And so the learning for the next time is we're going to perforate all the zones all at once when we drill the well, and then put the 2.5 or 2 3/8 inch tubing in. So they pointed that out. They also were saying with the smaller tubing, we can use velocity string where the gas just goes up, and we don't need pumps and things like that. So they've already looked at it already in a fair bit of detail.
Okay. And so anticipating, I've seen the numbers, production by year end should be netting 7.5 million cubic feet per day. That's trillion share of the whole. And in addition, we've seen gas prices go up a little bit in Turkey, right?
That's correct. We're getting over $12 US now for our gas. And then, like you say, we expect to, just by reperforating these 3 wells and putting in the water pumps, will be up to about 15 million cubic feet per day, 100%. So half of that would be ours. And the low-hanging fruit is just perforating the 3 wells, and we will be doing that. We get the tractors, because we needed the tractors. So the tractors will be there probably next week. So we'd be perforating in about a week or 10 days.
So this is happening right away. So we're going to see an immediate production boost once the new perfs take place.
That's correct. And then there's also this big rumbling. People say money, money, money. To do all the perforations, our percentage cost is about $600,000 to $800,000. And how it works is that TPAO is the operator. They do the activity, they perforate, they send us an invoice, and then we have to pay it in 30 days. So we already have gas production, right? Because everybody remembers that gas production is instant. The minute we perf, the wells are on production.
Right, they're connected. And then for next year, you've got the sidetracks. I think there are 5 sidetracks for next year. So what you know now is obviously going to speed up the production of the sidetracks and avoid these issues.
Yeah, that's correct. And the other little part about it is when we're talking about the sidetracks before, so the existing borehole is there, and there's existing perforations, but they didn't recover all the gas for one reason or another. And some of them is because of the water loading, and because they never used ESP pumps and so on. So if we find out it works for our trial study, because we're going to try an ESP or progressive cavity, then potentially we don't have to drill all sidetracks. We can re-enter the old boreholes and do nothing but pump the water down, and the gas will come back on. So that will be way cheaper. That'll be like a couple of $100,000 versus 8-9 million
to drill a new well. So, the rumors are flying, and basically the rumor is that TCF is not going to make it, that you're going to go out of business. So look me in the eyes, tell me that you're in this for the long haul, and that the solvency, the future of the company isn't in doubt.
Yeah, the company is here, and it's not. There is no doubt in the future. And one of the things about business, I always say, it's not about the money you manage to get. It's about how you manage the money you do get, right? And there is right now, there's no issues between now and early 2024.
Sidetracks are drilled. They're all producing optimally. What can production look like at that point? And I understand it's an estimate at best, but you have a pretty good idea. You know what your reserves are. You know what's in the ground there under the water.
Yeah, that's correct. And what we did was we just used the legacy wells because they're identical. Some are not as good as pay as we have. And so our exit for 2024, or in that range, should be about 25 million cubic feet per day, 100%. So half of that is ours, and that's being middle of the road.
And that's nearly double what you're expecting to end 2023 with. And hey, we don't know what the price of nat gas is going to be. Nobody knows that. I mean, just to look at the traders in the United States, we had a recent breakout in the price. Nobody was expecting it, but of course, that's when it happens. So just if we had the same price that we have now, which is unlikely, it's going to be pretty much an 80% increase in monthly revenues.
Yeah, that's correct. And right now there's doom and gloom out there. Like you say, everybody's saying that the TCF is not going to be around. And like I say, that is, in my opinion, that is a group that's putting that news out there for certain reasons. And I'm afraid to tell them, or happy to tell them, that TCF is going to be around because we drilled the wells, we have the gas there, we're getting a good gas price, we have a way to solve the issues we have, we're just going to execute it. And at the same time now, our oil block that we're farming into is looking better and better because I just asked for some information and it appears TPAO, the government company, has licensed about 4 more new exploration wells within a few, if not a kilometer from our blocks. And so those wells will probably be drilled before we actually drill our wells. So in what we used to do in Canada is when we had an exploration block and somebody was going to drill right beside our block, it was like getting a free look at what we had in our block. And for that also, we're starting the seismic for the eastern over the part that has the anticline, because we also have some surface mapping now. And the anticline that has those large oil discoveries, both of them trend and pass right through our farming block. And so it's looking really, really good.
How much are those other anticline fields nearby? And my understanding is one's as close as 10 kilometers. How much are they producing, those fields?
So yeah, again, the information is pretty tight, but again, I just got an update here a few days ago. They have six wells, and they're producing 18,000 barrels of oil per day. And, you know, they produce over 1,000 barrels each, and they intend to just keep drilling. They're just going to keep drilling.
Those are gushers, right?
Yeah, they're really good wells, yeah. And that's 36 and 41 API.
And you're pretty much very similar geology to what they've got there.
Exactly the same geology. And for that 18,000 barrel of oil per day field, that anticline is on surface mapping, carries right through our property. And there's no seismic on that block where that anticline is, and no well. So it's complete new ground.
Okay. So when's the earliest you think you'll be drilling your first exploratory well?
So that first exploratory well will be in June or July of 2024. We'll have the seismic shot because we have to shoot it before the winter. Before December, we'll have some rough, I'll be there looking at it, but it'll be processed. And the early processing, we'll be able to see, you know, in a gross sense, the size and the location or the geometry of that anticline. And that will be a news release I'll be putting out right away. And then by February, March, we'll have the more refined mapping, and then we'll set up to drill June, July, and drilling is $2.5 million.
Yeah, this seismology, you were doing the updated seismological study on SASB. Where is that at now?
So we finished the reprocessing. The mapping is going to be starting here. They're now doing the calculations of the AVO. So some of the rough mapping for the faults and stuff like that is occurring right now. And then in about end of November, they will start to map the AVO anomalies and so on. So we should start seeing some fairly good maps by January, February.
And hey, just one thing about seismology, the way it is now, when you drill for oil or gas, it used to be, you know, you had a guy with a divining rod, 2 out of every 10 wells would be good, 10 would be dry holes, dusters. Nowadays, it's the opposite, right? When you actually drill for oil or gas, I don't want to say absolutely certain, but you have a very good idea of what you are going to find when you start drilling.
Yeah, that's correct, especially on SASB, because the way the gas and the sands with the porosity, because they're such a good reservoir, that, well, I'm not saying they're going to calculate, they calculate an anomaly thing, and it's called AVO. And from the drilling, we know that we can see the gas in the seismic. It has to be a certain thickness and so on, but all the old pools that we drilled and the new pools we drilled were based on the signature, and then they do a color contrast, and it becomes very hot. And it is. I said one time I'm 100% sure we'll get oil and gas, and then Security Exchange pulled me up and said, no, I can never say 100%, and that's a true thing. So I am as certain as I can be that there's gas there when you see those anomalies.
Hey, and just to drive home the point that I trust your judgment, you're 6 for 6, right?
Yeah, that's correct. Yeah, and also what people don't realize is that 3 of the wells that we actually drilled were exploration wells, right? So like for Gulich 2, there was a Gulich South, and that was a reserve well. We never drilled that one because we saw a better AVO signature, what I'm talking about, in the northern one, which was the exploration block. And so when we drilled that one, we got 75 meters of pay versus this 35 in the southern one. And the southern one still exists. We never drilled it. It's proven because it has a vertical well. And yes, so we're 6 for 6.
Yeah. So when you say, when you drill, you're almost certainly going to find oil or gas, I tend to believe you based upon your track record. Unfortunately, the production lagged the drilling because of the issues you said, but it's all part of the learning process. And more importantly, you're optimizing the production now, and it's just a matter of doing the perfs, getting the pumps in place, if that's what you decide to do. But by the end of the year, we're going to see the production that we were expecting all along.
That's correct. And when we talk about the averages, so when we perforate these 3 wells, we will be at that year-end production for the first month or so. So they'll come in very, very high, and then so we will then start getting some good cash flow from that.
Okay. So it's always darkest before the light, as they say. The market is the market. We don't need to question what its reasons are, rationale. But my feeling is that in the end, value wins out, and even more important than value is cash flow. When the money's coming in, nobody can say that Trillian's going to disappear, can they?
That's correct. And again, talking about the cash flow for now, like for the exploration, for the recompletion and so on, is not that much. Where we need the big cash is way next year, and we'll have these wells on producing, and we will be banking most of that money. So that's like way in the future there. And we still have the $5 million worth of consumables that we purchased for those sidetracks. We still have that. So that's already paid for.
Yeah. So you already paid for a substantial portion of this future drilling. Art, I want to thank you for coming on. Thank you for, looking me in the eye and telling me what's going on. I hope, when the production's up, the cash flow's up, you'll come back on and we can drink a glass of virtual champagne, kiss 2023 goodbye, and look forward to 2024.
Yeah, that's correct. And in 2024, we'll hit that big oil well.
Go to the company's site, trillionenergy.com, sign up for notifications. The most transparent, up-to-date reporting of any company I've ever seen. Ticker symbols, Canada, TCF, US new symbol, TRLED. I'm still holding my shares. Bart, we'll talk to you in a couple of months, hopefully.
Okay, thank you very much.
The Financial Survival Network.